And yeah, huh? Okay, good morning. Good morning to everybody in the room. Just see you guys coming in slowly but surely. Okay, not a huge group, but that's okay. Right, I am going to share my screen and we're going to talk about the markets, and we are going to determine what we think is going to happen this week. And if any of you got any questions, then fire them in. We can get to them, not a problem at all. So let's share screen to start with. And we're going to go through and have a look at everything. So let's start with what the seasonal patterns are suggesting, because they actually just about worked out last week. So the seasonal long last week, or the seasonal chart of the week, was the Aussie yen for a long. Now, I find this one quite interesting. Aussie yen for a long on the week, and it did have a big dip, but eventually it recovered, and it's just about green. So the Aussie yen long for the week actually worked out. Now this week, so we've got a few different time frames to kind of think about. We've got the weekly time frame, which is obviously going to be a little bit more, probably in many respects, it's going to be less trustworthy, if you like. You know, we're not going to be able to trust it quite as much because weekly changes can be subject to a couple of factors being slightly out. If we look at the monthly bias, the monthly bias is probably going to be, we can probably trust it a bit more, and the 3 monthly bias we can probably maybe trust a little bit more than that. So let me give you the weeklies and the monthly and the 3 monthly, and we'll see if anything correlates. So to start with, the actual weekly bias is suggesting that we should be looking for Aussie dollar long. And if we look at the chart on the Aussie dollar, now this is on the weekly chart, we can see that there is just this resistance point here, which it hit and rejected. So for us to get along on the Aussie dollar, there's not that much to go. It's 50 pips really, sort of like before we hit significant resistance that's already proven itself to be probably not that reliable. It's got to go through that point, and we can think about what might drive it through that point. But Aussie dollar long doesn't look that attractive. If it was down here for this week, then it would be a lot more attractive. But that move is already quite close to the resistance point, so probably wouldn't be looking at the Aussie long myself. The euro dollar would be long, Aussie dollar long, euro dollar long. Euro dollar is through this level here, but after a big move to the upside, then I think the most natural probably the most natural next move would probably be down. So again, you know, you're looking at dollar weakness going into this week. Now that's a strong looking bar, and we saw, you know, really the dollar had a terrible week last week. It had a very negative week. You know, back to the Aussie, we see some upsides for the Aussie dollar, which means that the dollar was weak. Upside for euro dollar, dollars again was weak on that particular time period as well. Kiwi dollar is the other one that is showing for a weekly bias to the upside on the seasonals. So let's have a look at the weekly on the Kiwi dollar as well, which will probably be up the top here somewhere. There it is. Well, same thing. When we look at this one now, that one's probably got, it's got a little, again, it's got a little bit of room to travel, and you can see that there's some significant upside there. So out of all of them, this one looks the most attractive. So if we were looking at Kiwi dollar long, what we'd need to then break down is what happens on the daily. Now, if we consider this on the Aussie yen last week, let's see how we would have traded the Aussie yen last week with a bias to the upside. So the bias is to the upside. So we know we're looking for Aussie dollar long, euro dollar long, and Kiwi dollar long. Now, if we consider that what would have happened last week. Now, when we were up here, so this was this was the bar last on the previous week for the Aussie yen. Now that was moving down, that was moving lower. So we could have looked for a lower high here on the daily. That's on the weekly chart. So we look at the daily. Did anything come down and suggest that we should be looking for longs? No, it didn't. And actually on the daily, there was nothing. So I like to go down sort of 2 time frames. So on the 4 hourly, what was it suggesting? Well, really, as we got into this week here, this was still showing a lower high. So this was still in a downtrend on the Aussie yen. And it was still in a downtrend on the Aussie yen here, another lower high, hit this base. And then we got this move here, which was a little bit suspect. I don't like it when it doesn't take out that point, and the actual wicks didn't. But by the time it had actually gone to the upside, in my opinion, there was no safe entry on this on the 4 hour. So on the weekly, that wasn't really, even though it moved to the upside, and in fact the best we had was this one point here, but it had already gone a long way by that point. And if you were remaining in the position, you would actually be slightly in negative territory. So even though the Aussie yen was long on the weekly, there was no clear chart pattern that we could have traded. So that would have just been one of those things. We don't get to trade it long. We don't get to trade it short. We're actually safe in the market. Now, if we look at the Aussie dollar, this has gone up a long way. So where would we want to get in? Well, the first position is here. If this price comes down here and creates some sort of bottom on the 4 hour, then we can see if we can take a position to the upside on the Aussie dollar. So that particular price is going to be in and around here, which is around about 0.680 is there, but it starts on the 0.680. So you're looking for that to retrace there, and then see if you can get some sort of bottoming pattern, whether it's a some sort of bar, you might get a low test bar, you might get a decisive bar, you might get an engulfing pattern, or you might get an inside bar. So you're looking at, in this particular position here, does it also bounce off the, if you're looking at a wave rider, does it bounce off the moving average or the weekly pivot, or it would be a horizontal level? You can see that there's a horizontal level over here. And does that also happen on a daily? Yeah, it does. You can see it here. So that area there, somewhere between 0.6780 and 0.67, 0.680 and 0.6790. That's where you'd be looking for a signal to move that to the upside. When it comes to the euro, back to the 4 hour to start with, here's the area that it broke out from. And again, this is the point. So that would coincide with that position on the Aussie, coming down to about 1.113. I'd be looking for positions here for the euro. So if it retraces there and gives us some sort of reversal bar, a reversal pattern, really on the 4 hourly. So for 4 hourly traders, this is a much better way to kind of think about the charts on the weekly seasonal bias. So weekly seasonal bias, you're looking at short-term positions. So shorter-term time frames, a 4 hour would be better. Then the final one would be the Kiwi dollar, and that's going to be similar. So it's all on this first red bar that you see. You're looking around about there for a reversal in trend. Possibly, if it comes down to here, you're still looking for a long, but that would be the first opportunity. The second one's down to the second red bar in this sequence here, and that's the same for all of them. The euro would be same. This euro would be the best because it would retrace right the way down to the breakout line, and then you'd be looking for longs in this area. So that'd be the favored area, but it may not have the power to come all the way back there. Now on the monthly, the dollar Swissy, dollar yen, and Kiwi yen are all shorts. So the dollar Swissy, now the problem with the dollar Swissy is that it's gone a long way. You look at this, now that's going to be for the month. So if you look at this on the monthly, really you're looking for this to come retrace all the way back for a few days and then give you a position somewhere around about 0.88 30, or maybe even 0.8920, somewhere in about there would be a position that you could try and take short. But it's gone a long way and not that attractive. That's going to look pretty oversold on most time frames. So looking at that on the monthly would be another short, but not that attractive. What about the dollar yen? Well, this one's actually better. The dollar yen's better because it's pushed to the upside, and now it's just started to retrace into this bar here. So the dollar yen short is looking like a much more attractive proposition. Now, if you're again looking at where this could go, you'd have to work out what was the high, low, and close on the dollar yen. Any of you guys know where the weekly pivot is going to appear this week on the dollar yen? If you know where the weekly pivot is going to appear on the dollar yen, then you may well have a position to sort of like look for a particular price. The most obvious price on the horizontal level would be around about this point here, which is going to be about 141, 141.12. 141.12, maybe a little bit lower. 141, maybe around about the 140. Is it 141.12? Yeah, 141.12, or maybe around about the 140.60 level. So in this zone would be where I'd be looking for a price pattern to go short. It could come all the way back to the monthly pivot, but it's still looking for short. So so dollar yen looks like a decent opportunity to take the short as well. And the Kiwi yen as well is another one. Now, with the Kiwi so strong against the dollar, it may not be the best opportunity, but that does look a lot more attractive. Look at that. That's a really attractive zone. Now, many of you don't draw trend lines, but if you are sort of people that draw trend lines, then this little dip here going in there has been pretty much tested, and you can see that that is also, you may be able to argue that that's a neckline of a head and shoulders pattern. And if that was the case, that would take us a few days along and then potentially be dropping. And that's the zone again. So the zone for the Kiwi yen short would be around about the 88.70. Now, so far, I have to say, given the technical picture, this one's the most attractive. So the Kiwi yen short would be front and center in my particular thinking this week. And it's already in the zone. You know, even as we go into Monday, it's already in the zone. And you could definitely be aiming for this monthly pivot down here, and maybe even beyond, because remember, this is a monthly seasonal bias to the short side. Now, on the 3 monthly, we're looking at the Euro Kiwi, and that one is also along on the Euro Kiwi. That's on the 3 monthly. So if you're looking at a position that you're going to be looking to hold for a longer period than the monthly or the weekly, then the Euro Kiwi on the daily looks pretty good. And you can see again, just drawing a trend line down here, there looks like it's managed to find some support down here. So do we have a bar yet that we could trade? Probably not. You know, there's not really anything there. It's probably got to get through this weekly pivot. Looks like it's got to get through the monthly pivot as well. But if it does, then it looks like it's got some open water. Now, that's got a bit of a journey to the upside as well, because that looks like the most obvious kind of target to start with. 188, 1.8855 would be an obvious target for the Euro Kiwi. And if you look at this on the monthly, breakout to the upside. So that's taking out this previous resistance, a break to the upside, coming back and testing where it came from, which is really positive. So nice horizontal level across here, probably somewhere around about there. It looks like it's tested it a few times. You could say that you might have to put that level in as well, but it's in and around this area is where it's testing. So stops are going to need to be in this area. Now, even if your stops are going to be all the way down to the bottom there, it's going to be around about 4/8. That's still going to be a 2-to-1. That's just, still a 2-to-1 trade. So the seasonal bias is looking for the Euro Kiwi long. It's looking for the Kiwi yen short. Now, those two, both those two currency pairs are of interest. I think they could be of interest. Now, if we consider the COT data, and what that's telling us about the market right now. I'm going to share this this COT data for you. You consider the COT data now. If we're looking at the Kiwi yen short, the COT data, let me bring up the chart, it's a bit easier to see. Here's the Kiwi. Now, what we have is the open interest, which is but basically how many contracts are alive. Big drop off in open interest, so not that much confidence in taking positions in the Kiwi right now, and the net positions are just starting to dip to the downside. The issue is that the yen is also very, very weak, very high in open interest. You know, it's popped right to the upside. So there is some significant interest in trading the yen, but they are trading it short. There's still sort of like a lack of confidence. The only thing is, this is COT data over the last 3 years, and it is at an extreme low. So what happens when things are at an extreme low? Really, the most natural sort of idea is that you know eventually people are going to reverse positions. So I think that the yen does become interesting, even though it's heavily sold off. It's so heavily sold off that the extreme can flip at any point. So that wouldn't put me off trading the Kiwi yen as a long. Sorry, Kiwi yen as a short. So you're looking at Kiwi yen as a short. Now, what about the euro? Because the euro Kiwi is another potential long. So we're looking at Kiwi short possibly here. Well, the open interest has died down a little bit. So there's not as much interest in the euro, and we are starting to see the positions just start to weaken. But they may have found some support here on the amount of buying and selling. So this doesn't really kind of put me off. It wouldn't put me off too much going for a euro Kiwi long. So that would be the seasonal bias pushes us towards the Kiwi yen short. The seasonal bias pushes us towards the euro Kiwi long. So we're looking at like weak Kiwi. The COT data is a little bit more difficult to ascertain a really positive signal from, but it's not off-putting. I think that's the key really that I'm getting from the COT data. It's not really something that is going to lead the idea, but it's definitely not off-putting. Now, if we finish up with looking at what the fundamentals might do to kind of drive us towards that, you know, any of these ideas, let's see what we have in the fundamental kind of picture. Now, this is our economic calendar this week. Now, when you look at the fundamentals, you know, if you don't have, if you want to trade in a completely different way, so you just want to trade on one of these signals, the fundamentals are the ones to go with, you know, because it's the fundamentals. News makes the move, so it's the fundamentals that are going to drive the market. The seasonal aspect to it and the COT aspect to it are just kind of extra layers that you put onto it, because you really want to know what's the health and the speculation and the determination of traders in the market right now, and that's really generated from what's going on with the fundamental data. So if we're looking for what's going on inside the Japanese economy, and we look at some of the fundamental data and with the Kiwi economy as well, what could move it this week? Well, let's have a quick look down. The euro is a consideration against the Kiwi. So Lagarde speaking, that may well be a driver. So you might find that on Monday that there is some upside for the eurozone, depending on what she says. So there's some speculation there. Global dairy prices is a bit of a mover for the New Zealand dollar as well. So we want to have a look at that. If we have a look at what's been going on in this metric for a number of months, then it's pretty negative looking. If you look at this here, look at that big drop last time out. And really, if you look at this on average, the odds spike to the upside. But if you were sort of, you know, to take an average of what's been going on with the prices, they've been a bit deflationary. You know, they are coming down, and this extreme spike to the downside more than wipes out this extreme spike to the upside. So on the whole, this number has been weakening. So we are looking at a little bit of weakness in the in some of the Kiwi data. This is the key number for next week for the Kiwi CPI. Where is inflation headed? If inflation is headed lower, that is going to then put pressure on the Kiwi, and that could be the trigger that gets us, off and running on the Kiwi yen. So we got chart patterns and seasonal patterns, which suggest that we should be looking at where Kiwi weakness. But really, to get the move, we're going to need this this fundamental data to match. Now, what's been happening with inflation? Well, year on year, there's a little bit of a leveling off, but we have seen some significant numbers from the United States falling from 9% to 3% over the course of the last 12 months. Many other countries haven't really enjoyed the same kind of disinflation that we've seen in the United States, but eventually things are going to start filtering, back through again. Much of the inflation that was created from the United States' issue was to do with the supply chains. Now supply chains are back on again, so inflation should start to calm down purely because of supply chains. Whether it's to do with the central bank, huge question. And if you think about what the central banks have been doing, and if you look down to the central bank's rates, the Fed are not really sort of any further ahead than most others. BOEs within 25 basis points of where the Fed are. The RBNZ are actually 25 basis points above what the Fed are, and the BOC are within 25 basis points. So we're very close. We got these tight ranges right now between the central banks. So how is it that the Fed have managed to create this miracle where their action has reduced the interest rate, the inflation rates, but no other country has enjoyed the same kind of result? Well, it's probably because the inflation collapse that we've seen in the United States was not that much to do with the Fed, and more to do with the fact that supply chains have come back online after, post-COVID. So what do we see from the RBNZ? Well, sorry, from New Zealand. Well, we probably would see a little bit of easing back with inflation. Now, if this goes anywhere under 5.9, that is going to be negative for the Kiwi. Anything above is probably going to be positive. Now, if you get the signal, this is the way to trade this. With the data. This is always the question: should I go before the data? Should I go after the data? It doesn't really matter in many respects. What matters is that you have your pattern, and if you have your pattern, now I wouldn't just trade it without some sort of signal. If you have a signal that you trust, and the Euro Kiwi long shapes up, then you go into it regardless of the data, and then look for the data to really sort of juice up your trade. Now, you should be aiming in that particular environment at least at a 2-to-1 minimum, because if you go to 1-to-1 for something like that, then you are flipping a coin 50-50. The data's bad, you're going to get run over. The data's good, you're going to get run over. The data's bad, you're going to get your 1-to-1. But so what? But if you game for 2-to-1, then not such a problem, because if the data's good, you're going to lose, but you're going to lose 1. If the data's bad, then you're going to win, but you're going to win 2. So you can even out these kind of the probability of you picking the data correctly because of the chart pattern and because of the seasonal pattern. That's in your favor. So all you need then is for the data to kind of work out, and then you'd be sort of looking at 2-to-1 or more. So this is going to be a driver. Now, if there is no setup before the data, you wait for the setup. If none arises, no big deal. If there is a setup before the data, I personally take the setup, because then the data can really help out and juice it up. Now, what else is going to move the market this week? CPI data from Europe. So if there is a Euro Kiwi long, what may happen is CPI data comes out from New Zealand, it's positive, driving the Kiwi up. But then the Euro data is also positive, and that would drive the Euro up. So we might be waiting a day before actually we get the result that we're after. Now, if you've gone for a 2-to-1 and the first one's a loss, it won't matter if the second one's a win, because you're gaining 2 to get 1. So Sticking to at least 2 to 1 and above is the idea. Now, remember, 3 months of seasonal data suggests that you should be able to get maybe even more than a 2 to 1. So something to kind of consider. And if you look down here, let me get rid of these. Where's my? There it is. You look down here. ECB at 4%. So the ECB are way below, not 25 basis points, 150 basis points below where the RBNZ are. The BOJ, negative 0.1%. So they are ridiculously below the where the RBNZ are. So the swing eventually is going to go back to them. Now, if there's disinflation in New Zealand, that brings it back in line with the euro and the Kiwi. Sorry, the euro and the yen. So that should also boost the yen as well. So you're looking really for CPI data from New Zealand. You're looking for CPI data, probably the core number, but the CPI data from Europe, and you're kind of looking for that to be probably still relatively strong, relatively weak in New Zealand in comparison. Trade balances, you want it to be positive from the yen to really kind of get some juice. And then credit card spending is not going to be sort of anything that's going to move the market that much. And that's it. So they're the sort of like the 3 things that I'd be putting front and center if I am focusing on those currency pairs. So before we wrap it up, are there any questions? Oh, good morning, guys. Good morning. Good morning, Bumala. Very good to have you in. You guys got any questions that you know, for the last few minutes that you want me to cover or get to, or anything that you are looking at that you want me to look at the fundamental or seasonal data of those particular chart patterns? That's fine too. Now, I'm only in once every month or so. So if you really have something that you'd like to ask, then be confident and grab the nettle and ask anything that you need to ask. But if not, then we will wrap. You guys okay? Are you clear on sort of, you know, how I'm using the bias, how I'm using the data that's on offer? Okay, all right. I don't see too much reaction, so I'm going to presume that you guys are all comfortable, and leave you to it then, and wish you a very good week. Just to reiterate, I'm currently looking at the Kiwi yen short and the euro Kiwi long. That is where my analysis would take me for this week, and holding as long as possible, particularly for the euro Kiwi. So I'll leave you to go, guys, to it. You are welcome. Yeah, welcome, Sam. I'll see you guys soon. Have a great week trading. Welcome, Paul.